Good morning. You're watching The Market right here on 18 Hour with me, Aisha Faridi, Nikunj Dalmia, Bandabash in the studios. And a nice recovery that we had in place yesterday. So a smart follow-through actually from Friday's price action, managed to eke out gains and almost a good 1% of a recovery from the session lows after what looked like a bit of a wobbly start. So we made it back to that 19,150 odd level. In fact, from the Thursday's lows, that of 18,837 thereabouts to be precise, we've almost seen a good 1.5% recovery. Similar has been the case with the Nifty banks as well. A 2.25% recovery coming in from Thursday's lows. And the small and mid caps have really come back fast. In fact, the Nifty small cap index alone has seen an over 5% recovery coming in. So that really is the picture. Fingers crossed on whether or not we're going to sustain those gains or not. That, of course, remains a big question mark. The only, slight bit of trouble is that you've not got the best handover, at least from Asia this morning. US, of course, managed to close in with solid gains for itself. So, yep, each day as it comes, I guess.
So, Aisha, look, you have to look at the global construct and the local construct. The global construct is that an oversold market was due for a bounce, and I'm referring to US markets here, and you got one bounce. There is BOJ and there is Fed. So all eyes for global market watchers would be on what the central bankers would do, and would they be acting and reacting to what's happening suddenly to geopolitical concerns, or how would they analyze the US GDP data? So these are factors which are important from a global market standpoint. But I guess Indian markets need to be analyzed independently. While you may make a case that, Indian markets have struggled, or Nifty has struggled at higher levels, which it has, I guess the recovery from Thursday's low, I think it's quite impressive. 3% up for the small cap index, which means, we've seen like a 5% actually. I realized it was 3, it's 5%. Now 5%.
3 for the midcap index,
yeah,
5 for the small cap index.
That's impressive. I mean, you lost 5%, you recovered 5%, you're still down, because 100 becomes 95, and from 95 if you recover 5%, you obviously have not gone back to levels of 100. But it's impressive. It's very, very impressive. Yeah. That typically means that if you really analyze the price action is sync with what we've been maintaining. That looks like this is a bull market correction, very savage, very sharp. And before we analyze the data, hey, guess what? The recovery started. Yeah. So the breadth of the market has stabilized. Large cap stocks within that, banks I think are leading the way. And you've got churn, which I think is clearly visible. What may happen, Aisha, is that while Nifty may take its time perhaps to go higher, because the earning push is not that strong. But I guess within small and mid-cap stocks, there are a lot of companies which are coming out with good set of numbers. I looked at numbers from Blue Star, TVS, just about so many companies, Marico, which have come out with good set of numbers. So what may happen is that Nifty will trade with an upward bias depending on the global cues. Mid and small cap stocks as a category which got fractured. Now based on numbers and valuations, you may see individual outperformance and underperformance. And I go back to that same point. I mean, look at the two sectors, it's obvious. Pharma, it is banks and pharma, or pharma and banks. Those are the two leaders.
Yeah. The only thing is that, there may be a FOMO feeling looking at Thursdays and rather Fridays and yesterday's price action, because many people were just waiting to see where the fall is going to stall themselves, and they're wondering whether it was a missed opportunity not to buy that decline.
It will happen. I think it will happen. Yeah. Why? Because if globally, things stabilize, if markets, let's say, see the index recovers by another 2-3%, the small and the mid-cap index, the FOMO feeling actually would come back. The sense what I'm getting when I speak to just about everyone, and you do make calls, when you want to understand market, to some market gurus, old-timers, fund managers, they're convinced about one thing, that there is abundant, if there is another phrase for abundant, please help me, but there is abundant, or there's insatiable appetite for insatiable appetite to buy into Indian stocks, and abundant liquidity which will be there on the sidelines. So which means the market downside, I think, is very limited. What you don't want to do in this market is that you don't want to chase stocks. What you also don't want to do in the market is that if you have a genuine long-term horizon, then you to ignore these falls. I'm absolutely sure that when we will analyze the selling of October 2023 in January 2024, it will just appear like a blip. It will not even be worth mentioning.
Yeah, just, to take your point forward, just look at the kind of recovery, for instance, from Thursday's lows that we've seen in some of these stocks, like an Adani Power or a Bank of India, for instance. So the recovery has been evident. Let's just take stock quickly of the global markets. As Aisha said, no, it was pretty strong when it comes to Wall Street. You had the S&P 500, which actually saw its best performance since late August, but not quite the same when it comes to the Asian screen. For the most part, it is in the red. You've got the Bank of Japan that will conclude its two-day policy meeting later in the day. There will be a raising of inflation forecast. So I think all of that really is weighing down on the Asian markets this morning. And the Nifty implied open as well indicates a pretty soft start at around 19,215 levels. But yes, to take that point forward with respect to the liquidity position, just mapping out the kind of data that we've got over the past few days for the FIIs in the cash market. And there you have it, the sell figures that even amount to about 7,000 crores, for instance, on the 26th of October. And in comparison, let's pull up the DII picture as well. And it's been an all-buy picture, Nikunj.
Aman, I don't think we must read too much into what is happening in terms of the liquidity picture, especially from the FI front, because 2 days ago we got that, last week we got that big fat sell number.
Yeah.
Then I think the data seems to be stabilizing. So frankly, if you ask me, from a positioning standpoint, this data is very important for me, which is that FI holding in the FNO market, the positioning is very short. So what are FIs doing? They're taking a view on India or they're hedging their bets. But their view on India is that, look, markets, when you are hedging this kind of a portfolio and when the positioning is 87% short, 12% long, which means that either you're outright bearish or you're hedging. I don't think nobody's outrightly bearish on India. That is not the reality, which means you're hedging your position. Why do you hedge your positions? You hedge your positions because you expect markets to go down in the short term and you want to protect your long positions. And this is an extreme positioning. So this extreme positioning sometimes favors you, which is that if we come on the right side of the Fed, if global markets stabilize, trust me, FIs would actually be forced to run for cover. We've seen the trend. See short covering. Now, as of now, it's short covering.
Yeah.
It has not become massive short covering. Give this market another 2-3 days, little bit of magic spell coming from the global market, and then what we are talking about as a short covering could actually be a massive short covering rally. It may happen because of the positioning of the market, and that really may be the trigger for the Nifty. But for that to happen, I think the Fed event we have to be on the right side of the Fed event.
Though it was interesting to see that, almost 65% of yesterday's recovery was led by blue chip, FI dominated names, the likes of HDFC Bank and Reliance Industries. Reliance, of course, reacting to its numbers, but these two giants were the ones which were cushioning the Nifty at least. But getting more micro then, and we're going to be keeping a close eye on what the monthly sales data for Motown is for the month of October. And while we have kick-started the festive season already, you may want to look out for, whether or not there is a return of the entry-level customers when it comes to two-wheelers. For passenger vehicles, of course, besides, of course, the inventory that they have on some of the older models, as indicated by Maruti for the past 2 months, whether or not there are higher entry-level discounts which are being doled out in the festive season. For CVs, that's commercial vehicles, unfortunately, it may not be as robust a month because there could be a month-on-month decline. Remember, the previous month had a very strong base, so it may not really match up to that previous month's performance. And for tractors, we're expecting muted sales amid this festive season. And, given as to how strong the contribution, Nikunj, for autos has been and how just about everyone on the street is excited that, autos is a story which is here to stay. It's going to be interesting to look out for what the month-on-month trends are.
See, it's a tricky month to call. I'll tell you why. Because you had, in the month of October, you had first Shraddh and you had Navaratri. So first you got 15 days of lull and then 15 days of festivity. So it would be a tricky month to call. Now, tricky month to call, but in terms of a trend, it will be an indicator of which way the Diwali would move. So from a market standpoint, what are markets watching out for? Look, tractors, we pretty much know the trend. CV, we pretty much know the trend. That 15 to 18% jump is here to stay. Passenger vehicle is the tricky one to call because that's where I think the shift in SUV is very strong. But Maruti has also been, indicating that they've had a record Dussehra and, are we in for a surprise there? But the one which markets would really be watching out for in terms of an understanding, if you frankly ask me, would be two-wheelers, and especially for entry level. Is the Indian rural customer or customer back? because this is a typical time when new bikes are being sold, new bikes are being exchanged. There's a strong replacement cycle which always happens in the two-wheeler market in and around Diwali and Dussehra. Because if the entry-level two-wheeler bike does not make a comeback now, then you can kiss goodbye to the recovery for next 6 months. Yeah. Because it is like now, see, if you want to buy, you would say, okay, Diwali hai, Dussehra, let me buy a bike. And that's typically how the pattern moves. Yeah. So if you don't get a recovery there, so I think that in a sense will have an impact on at least the stock price of Hero MotoCorp and the stock price of Bajaj Auto in the near term.
Yep, that is going to be closely watched out for, and I guess it will be a bit of a telling sign as to which way we could see the overall festive season pan out for the auto sector. Moving right on then, let's put the spotlight on the much talked about IPO. That's Mamaearth's parent, Honasa Consumer. The IPO opens for subscription today. Remember that Honasa Consumer is the biggest digitally first beauty and personal care company in the country. So this will closely be watched out for. A lot of marquee investors as well. And we've been talking to the management, Nikunj, as well, in terms of the overall valuation. This is one that will be closely tracked.
Look, they build a brand which I think is an exciting brand, and it's a brand which just clicks with the consumer, and especially the semi-urban and the urban consumer. And they've really done a great effort there. So I mean, the management clearly has put their blood, sweat, and tear, and they've created a good brand which will last. But if I look at the pure financial market first, let's understand the objective of the issue. Large part of the issue, I think, would be to give partial exit to PE players, which means that, look, the investors who invested in the company, market conditions are decent, they are looking at taking it forward. B, even though I would call, and I'm using Mamaearth because that's how you recall the company, it may still come under the startup category. In the consumer staple market, you actually have a lot of parallels, which means that you would look at the profitability of this company and say, okay, I can compare this with a Godrej, I can compare this with, let's say, HUL, I can compare this with an ITC, Dabur, Marico. So if you're in financial market investor, you would say, okay, I'm getting high growth, I'm getting a great management team, I'm getting products which they have managed to really create their niche. But OMG, I mean, what are the parallels? When Zomato went public, there were no parallels. Yes. When Paytm went public, there were no parallels. So that, I think, needs to be understood here. B, I think it's an expensive issue, and now it is on them that they build a brand, but in order to become profitable, can they really? They'll have to cut advertising costs, they'll have to do a lot of management. Can they really do that? But it's an exciting issue. I would say this is not an issue where if you're expecting bumper gains purely because of the valuation, you should expect bumper gains on the listing. Listing is going to be like 3-4 days. But if you say, okay, this is one brand which will keep on gaining market share, size will kick in, scale will kick in, they will be gaining from the incumbents and from the unorganized market, then you can take a long-term view purely because of the valuations. But it is absolutely incredible that what kind of brand the management team has created. I mean, the grit, the blood, sweat, and tear, and the effort they've put in, I think it's absolutely incredible. I mean, it's a brand which, in a sense, just resonates very well. So the brand is a recall value. But for stock to have a great recall value, I think some time has to be spent in the listed arena.
And also the thing is, I think, they cater more to the urban niche segment. So Unilever, Exafood may be the right comparable. I mean, look at their, brand line, right? It's Mamaearth, Derma Company, Aqualogica, Mompresso, Be Blunt, Dr. Shades. So, I mean, expensive products, and this is just consumer feedback here. So yeah, they don't really penetrate to a very large audience as it is. But let's try and understand what the global texture is like. What's the global mood point? Vinny is here to sum up all the commentary overnight. Vinny?
Good morning, and absolutely commentary that we have coming in for the all-important Fed decision that will be happening this week. We're keeping an eye on that, and some commentary coming in on that front. Now, Fed Chair, Vice Chair, actually, Philip Jefferson had said that, officials are now in the position to proceed carefully after the recent rise in the Treasury yields. Similar commentary is coming in from Fed Bank's Dallas President Logan, who is also saying that the recent surge in the long-term US bond rates means that there's a less need for the central bank to tighten again. So that's a factor that one should be keeping an eye out on. So two commentaries coming in from the Fed side. Other than that, moving on, we have a commentary that is coming in from ECB's Governing Council, Peter Casimir, who is saying that investor wagers are on a reduction in the borrowing cost before mid-2024 are unrealistic. Now, bets on the rate cuts happening already in the first half of the next year are entirely misplaced, is the highlight coming in there. ECB central banks, another commentary that we have coming in is from Simcus, who's highlighting that probably there won't be a need to lift the interest rates in its final meeting of the year. So let's keep an eye out on rate decisions coming in from the central banks across the country, across the globe as well. Now, lastly, we have a commentary that is coming in from a World Bank. Actually, this is a highlight in terms of the commodity outlook report coming in from the World Bank. They're saying that oil prices could be pushed into an uncharted water if the violence between Israel and Hamas intensifies, which could result in an increased food prices across the world as well. So a concern coming in terms of oil prices increasing as well as inflationary in terms of the food prices as well is what the World Bank is highlighting in its commodities report.
Shavini, for highlighting all of those global comments. Let's put the spotlight on technicals, levels to track. We've got CA Rudramurthy now joining in on the technicals as well as Naresh Merani. Naresh, let's get in a take from you then. What's the outlook on the frontline indices at 19,140? The broader markets haven't quite participated, but like Nikunj said, we are likely to see bits and spurts of activity in the broader markets as per fundamental news results, etc.
So, there has been a divergence in terms of the correction on the Nifty as well as on the small cap. In percentage basis, they may look almost similar, but if we look at the small cap and the mid cap indices, we are above the 50-day moving average. On the Nifty, we tested the 200-day moving average. On the Bank Nifty, we went below the 200-day moving average. So we are seeing this divergence wherein the mid caps and small caps are clearly showing outperformance. So we could continue to see moves as per the results and announcements over the next 2 to 4 weeks. There is a relative strength over there, so one can still be stock specific. On the Nifty, we've broken the last swing low of 19,300. So when we pull back, that is a price point you'll want to watch out for, 19,250, 19,300. So that should act as a resistance in the near term. And the market should make an attempt to make a new range. As of now, the bounce back came from 18,850, 19,300 as a resistance. So this should be the range for the next couple of sessions at least.
All right, Rudra, let's get in your outlook on the markets then. Which way do you see us headed? What's the direction of the markets and which do you believe is going to be the sector that will lead the move?
Good morning. See, for me, last week when I was in your show, Nifty was more closer to that level of 18,850. And I was just recommending definitely a buy because we were at a good risk reward to buy at those levels of 18,850 last week. And again, now the hurdle is at around 19,250 to 19,300, which was earlier acting as support, now acting as resistance. So for me, when we are closer to those levels of 19,250, taking a fresh buy trade may not be an advisable trade. However, let us see whether this 19,250 to 19,300 range gets broken on the upside. And once we see a decisive close above this range, then buying fresh will be definitely good. Or else I would definitely recommend a booking profit kind of a zone, both on Nifty as well as Bank Nifty. And if you look at Bank Nifty again, the support at around 41,900 to 42,000 is surely holding. And from there, the resistance is now kicking at around 43,300 to 43,350. So again, closer to these levels of 43,300, 350 zone, I won't advocate a fresh buy. Rather, let me close above these levels of around 43,350 and then one can look at fresh buying. And again, sector-wise, market has been very stock-specific. We are getting moves from stocks like, for example, Reliance and even ICICI Bank from private bank. So these are some of the large cap stocks which are available at good valuation and at again strong support zone. And these stocks can lead the market. Let us see what happens tomorrow on the Fed meet, and also let us see whether 19,300 on Nifty gets broken and then fresh positions on the buy side is advisable.
Right, okay. Let's get some stock ideas then. Naresh, what's on your list?
So first is the buy on ONGC. The stock did not correct much in the falling market and has come back very close to the previous 52-week high and an all-time and a multi-year high. Previous high for the stock was around 192 in the last 3 months. And going back all the way to Feb 22, when Russia-Ukraine happened and crude hit almost $130 on Brent, the stock had made a top around 119.95. So coming back again to the same levels. If it breaks out and sustains above the 190.92 level, it would be a big breakout for the stock. So preempting that move, given the relative strength, stop loss at 184, target price of 220. Second is a buy on Tata Power. The stock has corrected from 270 odd levels towards that 235, 240 support mark, which was also the previous breakout zone. So risk reward trade here for a bounce back in the short term. Stop loss at 230, target price of 255.
All right, Rudra, let's find out what's on your radar. Top stocks?
See, for me, Escort looks a very, very strong buy. Last week, it took support at its crucial zones of around 3,000, 3,030, from where we have already seen a bounce of about 150 rupee. So for me, even at current levels, Escort looks a very strong buy on chart. Stock can make a move towards those levels of 3,400, which was the earlier high, from where the stock saw correction. So I am looking at buying Escort available even in future. Buy at current market price. Look at initial targets of 3,210 and 3,400 to come next, with a strict stop loss of 3,140. For me, even United Spirit looks very strong on the chart. For me, McDowell is a stock which is looking for that initial targets of 1,065 and then to 1,100 zone. Again available in future, and open interest build-up is happening on the positive side for this stock. So I will be a buyer in McDowell, looking at targets of 1,065 and then 1,100. Keep a tight stop loss of 1,010 for this long call. So buy on Escort and McDowell.
Right, okay. Let's bring on board Anisha as well, discuss some of the other stocks which are in focus. DLF, strong show there.
Yes, strong show continues, and I'm guessing that's the reason the real estate stocks might continue their up move as well. The pre-sales were above what Street was expecting, because their latest project, which is Camellias, has done again very well for them. So there has been booking of almost 720 crore there. You also have the new sales booking of total of around 2,228 crores, up 9% year on year. They're expected to launch almost 11 million square feet worth of projects with a gross development value of around 19,300 crores. Not only that, the collections have also surged in tandem. So that's the good news, because that's up almost 50% on a quarter-on-quarter basis. And that's the reason that the company has achieved a net cash positive situation in the quarter gone by. Even if you look at the rental portfolio, the occupancy continues to be very strong at 89%. The net debt has also declined marginally. So things look good. But of course, the big question, Nikunj, is also in terms of the valuation. Yesterday, of course, we heard Chris Wood also talk about that there could be a repeat of that property cycle of 2002 to 2009, but the stocks are not inexpensive by any yardstick.
Anisha, with real estate, you must realize that when the cycle picks up, what looks small right now could actually become large. So if the real estate cycle is a 5 to 7 year cycle, just imagine that the land bank which they currently have. See, unlike a lot of real estate companies, DLF owns a lot of land bank. It's their own land which in Gurgaon, which they actually are developing. So unlike a lot of current real estate builders which are acquiring land, they're getting into JVs, DLF follows a very different kind of a model. So for them, operating leverage has kicked in. For them, financial leverage has kicked in. For them, they are now occupying that real recall post RERA, which has really given them a huge amount of brand power and pricing power, and I think the balance sheet is in a great condition. So with the real estate stock, you should never look at quarter on quarter numbers, but even if you look at the trend of last 3 quarter numbers, I guess the trend and the curve is clearly on the upside, and that really is very, very important. If you are a long haul guy, you would say, okay, what is the scenario? Real estate sector, will it do well in 3 to 5 years? Of course it will. Second, who's the leader in the NCR region? Completely DLF. Do they have pricing power? Of course they have. Do they have brand advantage? Of course they have. And the new launches, I think, have done exceptionally strong. If you just to make a point for our viewers, imagine if you're a real estate company, if you're selling something for 100 rupees a square foot. But if demand comes, you start selling at 120 rupees a square foot. That 20 rupees extra what you're making actually operating just straight away goes into your top line and adds your bottom line. I guess DLF is in that situation. Asha, we both have lived in Delhi. And just imagine the scenario of 10, 12, 15 years ago. There was Unitech, there was Supertech, there was Ansal, there was Utpal. Where are those builders? In the JP. DLF, the NCR region, even though we are talking about 20 to 25 million square feet of market, actually only has 3 or 4 builders left. Unlike Bombay, where you have an Oberoi, you've got an Rustomji, you've got
so many small ones.
in Delhi.
In Mumbai.
Yeah, Mumbai still still has formidable builders which have a recall and which have survived the RERA. But in NCR, I guess you only have 2 or 3 large builders, and DLF actually is one, and Max is the other one, and that explains why Max Real Estate had a great listing yesterday, and this one also is going to go up.
It didn't have a great listing.
No, it got delisted at 225. Then price discovery happened at 290, and it was circuit down. But from where it delisted versus now, the stock is up 40% that way.
Okay, that's real estate. Interesting scenario there. But let's also paint the picture when it comes to autos and TVS Motor in particular. An inline set of numbers. What have been the con call highlights, the management commentary and brokerage view, Anisha?
It's largely positive, to be honest, because there was an improvement even on the operational front. The margins came in at 11%. Yes, part of the street was already expecting that, and that's what the company has delivered. Now, in terms of the con call, they do talk about how the market share of the company has jumped up to 16% in FY23 versus 14% that we had seen 4-5 years ago. The market share in the two-wheeler segment also has jumped up. And if you look at the exports as well, they're talking about how growth is likely to sustain in the medium term as well. Raw material prices have largely stabilized, and that's what they're expecting to be like going forward as well. The FY24 capex has been planned at around 1,000 crores and investments at around 900 crores. Overall, as far as the demand outlook is concerned, while they said that the festive season sale have been robust, there is still some pressure when it comes to rural demand, and that is what they're watching out for. As far as brokerage view is concerned, Jefferies has actually gone ahead and increased the target price to 2,000 rupees versus 1,750 rupees earlier. They're talking about how it's a new high of the quarterly performance. The two-wheeler space is recovering. They're saying the entire basket of events, whether it's the exports or the margins or the investments, they're all on the uptrend. So things looking good for TVS Motors as far as Jefferies' view is concerned. But what's your view, Nikunj, on TVS?
Expensive valuations, and for expensive valuations to sustain growth actually has to sustain. The growth actually is sustaining for them. For me, I think what really matters for TVS Motors is that how incrementally they are able to build up the electric franchise. See, you look at the positioning of the entire two-wheeler market. There is Ola, which is doing rather well in terms of having a prominent presence in the EV space. Then you got Hero MotoCorp, which has failed to have a meaningful impact in the EV space. Bajaj Auto is trying their bit, but they are late entrant. And TVS from the incumbent, really the incumbent is the first one to take a huge giant leap in terms of their EV faith. The stock is not cheap by any mean. But for a premium valuation to sustain, premium growth has to be there. And the positioning of the stock now actually would be a function of how are they able to build up their entire EV space and what kind of new platforms they are able to come up with. So frankly, for me, that really becomes the optional value for TVS now to go up. I mean, the stock has just had a dream run. I mean, real dream run if I compare where TVS was versus where it is and versus where other auto stocks have done. So I think now the P expansion in TVS is over, but the optional value would be a function of how the EV business moves. You know, Anisha, they've not raised money in the EV platform. Just think about it. Tatas have raised money, Mahindras have raised money, and they have a decent EV business. They've not raised money. If in next 12-18 months they're able to raise money, then that becomes the optional value. I'm putting logic here on the table. That's how these things have worked in the past. They've got Ola has been raising money. They just raised money in their entire, Ola Electric 2-3 weeks ago. So there is appetite in the entire EV space. So that for me is the optional value which will decide how the stock would move now.
Okay, that's going to be the deciding factor. Thanks very much, Anisha, for joining in and highlighting those stocks. Tell you what, we'll slip into a very short break, but the market chat continues when we return. Welcome back. Still tuned into the market. Sanjeev Bhasin, as always, now joining in on the show to share his outlook. Sanjeev, hi there. Good to have you on board. We were discussing lots that's going on within the real estate space, in particular for a DLF, for instance. What's your outlook then on the kind of earnings that they have delivered? The fact that the new bookings as well have grown significantly, and within the Delhi NCR region, they are one of the very few formidable players.
Yes, good morning, Avan. Superb set of numbers, but like you pointed out, the stock is near its all-time highs. But I still think that real estate is in a very sweet spot. Given that all assets have gone up, particularly gold, stocks, the smart money is going to buy, fixed assets. And it's evident. You mentioned a lot of names. You forgot to mention Godrej Property. I think their new launches, they are now one of the biggest players along with DLF in the Gurgaon area, and the new launches are just being taken by storm. Same is the case which I heard on Oberoi and in Bombay for Godrej. So I still think there can be a marginal correction because of good results being priced in, little expensive valuation. But the real estate story is just starting to flow. And we know that, till the elections and beyond, assets will be in a cycle which is on the uptrend. Plus, you are seeing now that inflation, interest rate, and bond yields all start to, decline. So I am very sure that real estate should be a proxy play in your portfolio. Now, whether you buy DLF now or where we advocated much lower, I think they are still going to make higher highs. Both Godrej and DLF, as a disclosure, are in our portfolios, and we remain very, very bullish on both those plays.
What about Marico? It's been a decent set of numbers, and more importantly, the management commentary has been strong. What do you like within the mid-cap and large-cap FMCG space?
So I like Marico's numbers were very strong yesterday, and Nestle has been the top pick. Even though an expensive valuation, the management, I pointed this out 6 months back, has invested in the capex, and they are very, very bullish. You can add a Godrej Consumer. I think that will be another strong play So these three stocks, Marico, Nestle, Godrej Consumer, all three seem to be very well poised to gain more market share. And as we see a easing of slight bit of commodities, I think their margins should be much better given that volumes are expanding, and we are at the best part of the season now for the next 6 months.
Okay, fair enough. We'll closely be also watching out for the auto sales numbers. Do you think that we can see the festive sales drive auto dispatches this time around? Are you expecting some sort of a big delta?
So our auto stocks were front leaders, and you've seen the likes of TVS and Maruti hit all-time highs. So has Mahindra, so has Bajaj Auto, which tells us that the market has maybe already discounted very, very strong numbers on the sales side. And like you said, if you went to smaller cities, I was, by the way, in Rajkot, Junagadh, and Somnathji over the weekend, and wherever I went, I mean, the eagerness to own stocks, own autos is an aspirational size, and on a weekend you could see the hordes of crowds in showrooms and so on. And this is just a casual observation because I do that quite often in smaller cities. That is where the real growth is. You pointed out to EVs being a culture and expanding, but I still think ICE vehicles are going to be, a parallel market which will grow. But the advent of EVs is definitely seeing the bigger names like Tata Motor and Mahindra take the cake. But I remain very bullish on Bajaj Auto and Maruti. The dark horse play can be Ashok Leyland, because I think passenger buses is seeing huge demand, and their CV penetration into more market share from Tata Motor can see Ashok Leyland be a dark horse in the coming few months.
Sanjeev, hi, morning. The Mama Earth parent, Honasa, as well opens for IPO today. Looks a little expensive though, and of course there's a PE exit as well involved here. Subscribe or not?
Aisha, good morning. I'll have to excuse because I think our merchant banking is one of the advisors, so I cannot comment on that.
Okay, I get the drift. Okay, let's talk about some of the other names as well. And, yesterday you had Reliance actually hold up quite a fair bit. In fact, Reliance and HDFC banks, they were the ones which really contributed to the recovery in trade. Sanjeev, you've been liking Reliance for a while right now. We've discussed the numbers yesterday. The stock managed to recover 2% yesterday. It's back above 2,300. But where do you see it headed? You think this year it's going to largely consolidate?
So Aisha, firstly, let me tell you, this 7-day fall which happened is not going to happen every day. It was, say, once in a blue moon, exasperation, accentuation of a lot of things. I can see a parallel 7-day rise, if I may say so. And I think 19,300, 400 is just technical levels. We will bypass that. Earnings from Reliance, from Maruti, from Ultratech, from Nestle, you name the stock, you name the bank. I mean, ICICI now seems, so I am very, very confident. Reliance cannot trade at a market cap of 15 lakh crore when 10 lakh crore is just the retail business. And you saw the numbers. ARPUs are growing. The need for new energy and OTC is doing extremely well. Even at $85, $88, gross refining margins may have already bottomed out. So what I'm saying is, please let's not you. I mean, the investors should not get carried away by 18,800 being a sacrosanct number. It may have come, but the fair market is 19,500, 19,700, and we are getting there very, very fast. This Diwali is going to be sparkling, and it will be led by Reliance. 2650 is coming on Reliance by the end of the year.
Okay, Sanjeev, stay with us. Lots more to discuss. But Crompton and Butterfly Gandhimati will be in focus today after the companies have called off the merger as Butterfly Gandhimati's shareholders rejected this particular deal. Somit, joins in to tell us exactly on what grounds the rejection came in, Somit.
Well, to everyone's surprise, the Crompton Griff's consumer and Butterfly merger is now off the cards for now, and this is because the merger could not receive appropriate public shareholder approval from the Butterfly Gandhimati shareholders. Now, what we understand is that 37.15% of the institutional public shareholders of Butterfly Gandhimati have voted against this merger, while nearly 96.5% of the non-institutional public shareholders have voted against this merger. Now, in Butterfly Gandhimati, the promoter owns around 75% stake, while the non-promoters own around 25% stake. That is, public shareholder is around 25% stake, and the promoters of Butterfly Gandhimati is CG Consumer. Now, this merger was approved on March 25th by the board and the merger ratio that was decided was for every 5 shares of Butterfly, nearly 22 shares of CG Consumer was to be allotted. Now, the key rationale behind this merger was to accelerate the realization of synergy benefits. It was also supposed to simplify the corporate structure. It would also lead to faster go-to-market strategy execution and would also lead to higher focus on product innovation. And now what the brokerages are believing is that as the merger has been called off, there could be delay in decision making going forward for both the companies, and would also lead to a division of management bandwidth among both the companies. So this would continue to remain an overhang. Now, what we also understand is that among the institutional shareholders, nearly 4,30,000 shares have voted against the merger, and Aditya Birla AMC owns 4,30,000 shares in Butterfly Gandhimati.
Okay, that's an important one to look out for. And a whole host of companies like Marico, UPL, Petronet, all of them have declared their numbers and have, recently come out with their management commentaries about, what's the future outlook looking like. Sharad is here to give us a summary of all the con call takeaways. Sharad?
Well, yes, in focus we are having at first UPL, and of course the numbers were on the weaker side, that they had cut their guidance, but from the con call what we are hearing is that the second half of the year will be actually better, and the Q3 would be watched especially because of the El Nino impact. And also the important thing is the company is still on track to deliver its FY24 guidance. Now they're targeting to reduce the gross debt by roughly $500 million as well. Now, importantly, Petronet LNG also in focus. They have stated that the volume outlook is especially healthy, but they are eyeing lower prices when it comes to renegotiating their long-term deal with the Qatar Gas. And the important Petchem project which is discussed upon, and of course there was a kind of a negative reaction in the stock also, and they have stated that this commissioning will happen by FY28 itself, and this could generate an extra EBITDA of almost 4,000 crore per annum. Also looking at Marico, of course the numbers were largely in line, but the most important thing is that they have upgraded their margin guidance. Now looking at the gross margins, they are expected to kick in between 350 to 400 basis points. Earlier this was 250 to 300 basis points, and if you look at the EBITDA margins, that is also expected to go by almost 200 basis points. Earlier this range was coming between 100 to 150 basis points. Now revenue growth is likely to accelerate in this and turn positive in the second half, as also the gross margin expansion that is expected to go up also by roughly 350 to 400 basis points, and the overall volume growth that will be driven by price cuts. Now also looking at APL Apollo, very strong set of numbers coming in, but the most important commentary coming in from the con call is that there's no more promoters selling happening in the company. That's what the management have stated, and they've also stated that the railways as a segment is also very promising, and they're expecting that important contributions might come, especially for 1,500 stations which needs to be redeveloped, and this will augur well for the company. Lastly, MGL would be in focus, and they have stated that the Maharashtra's draft EV policy could have limited impact on the company, and also the volumes have picked up in the second quarter itself. And if you look at the long-term guidance, that still remains intact of a 5 to 6% top-line growth.
Okay, quite a few con call takeaways coming in there, which Sharad just highlighted. And we've already discussed what the prospects for Marico are, but there's UPL as well. This was quite an interesting one, given that, ever since FMC's guidance, or rather warning, came about for the guidance, being the global major, you did see a fair amount of correction play out in the entire chemical and fertilizer space. Of course, UPL as well took it on the chin from there. But they're saying in their conference call that they're looking to deliver better profitability in the second half versus what they did in the first half. And they've got an eye on the third quarter on El Nino impact on major geographies, but they're on track to deliver on their FY24 guidance as well. Sanjeev, you think this could be a contrast space in the market, or would you say avoid, because there are many other growth sectors and opportunities? And I'm talking about purely chemicals here, the likes of UPL, etc.
Correct. Now, if you want valuations on your side, then the prices are giving you that chance, because we know that agrochemicals, stroke pesticides, and that whole specialty chemical basket has been hit due to lower consumption demand and some sort of slowdown globally. China has been a huge contributor to that. But I think China is definitely now on the cusp of a recovery. The government is doing a lot of initiatives, and these are seasonally played out stocks, which have an effect of weather and other things. I think the next 6 months bode very well. SRF has been one of our top picks. I think the numbers were far better than what the street expected. You can add a UPL because the management has confirmed that they will be reducing their gross debt, which will add to the return on equity. And I think, you can also add a small Aarti Industry. All three, these stocks could be a relative outperformers, but maybe one more quarter of weakness. But what we are saying is that maximum amount of pain is already in the price, and SRF came out with 23% less margin profit, but people were pricing in the worst. So I think the performance has been fairly robust, and I think the second half can be very, very attractive, particularly for SRF. As a disclosure, this is one stock under our accumulation, and we remain extremely positive on this stock, which has corrected almost 20% from its recent highs.
I want to revisit the recovery names here. Stocks and, stocks which have recovered the fastest and perhaps even large in terms of quantum from the recent low. One of them actually is Adani Power. I looked at data in the morning. Adani Power actually has done phenomenally well for itself. Can you look at the data which captures the recent low rather than just yesterday's graph, please? We had that data. Chakri Lokpriya, joins us while we wait to load that data. Chakri, good morning. Thank you for joining us. What's been your market approach in last 2 or 3 weeks?
Good morning. In terms of lots of these power stocks have corrected in the last in the last few days rather. And individual stocks are down a good 10-20%. So I think in terms of financing of power, through REC Power Finance, through the power companies itself, like buying like BHEL, Siemens, I think those will continue to do well because the long-term story is intact. It's just that the short term there was a profit-taking bout. So I think because the story is intact, we've been buying.
Okay. And where have you reduced your ownership or exited completely?
Yeah. In fact, one of the big calls that we took was we do not hold HDFC Bank at all after many, many years. Simply because it's a great company, but the valuations are still kind of reflect some of the integration issues that the company has, which will continue to impact its margins for a good some time more to come. I think that and in general, so banks we don't own as much, but NBFCs we're making up for that way through NBFCs.
Hi, morning. The Mama Earth parent, Honasa, the IPO opens today. Any view here?
Yeah, I think it's a great company with a great franchise and a great brand recall. I think those are the very important factors for a consumer company. And against this backdrop, their model of expansion throughout the country has also been fairly disciplined. So irrespective of the valuation, I think we would be clearly subscribing to the IPO.
Okay. You would be subscribing to the IPO. Did I hear it right?
Yes, sir.
Why would you do that? I mean, if I look at the valuations, if I look at the relative and the absolute outperformance, what is there in Earth IPO which in a sense is prompting you to subscribe to it?
I think it's basically the what you call the brand franchise. It has a very strong brand recall, which is one of the most important things, and valuations will catch up over time as long as the revenue growth is in place.
Okay, I want to go back to Reliance, only Reliance, and it was only Reliance yesterday. Reliance, if it comes back, we are looking at 10% of the Nifty coming back. HDFC Bank, it comes back, we are looking at 14% of the Nifty coming back. Reliance, but since I'm revisiting Reliance here, it reacted to numbers which came on Friday, yesterday. There's nothing in the numbers, everything was in line, yet the market reaction yesterday was quite powerful. Did we miss something? And did market react to something which we missed on those numbers on Friday?
So Nikunj, the sentiment, and you know that Reliance and HDFC Bank have been the chief contributors for this 1,000-point correction. I thought the numbers were far ahead of what the street was making, given that oil to chemicals, you expected GRMs at lows. You know that a large part of the other businesses are still in investment in pending in the new energy. But the numbers from the retail and the geo are very, very strong, and they continue to gather strength there. So I think that on a sum of parts, like I said, 10 lakh crore retail, if you gave the retail a valuation, then the rest of the business has 5 lakh crore, 5.5 is unjustified. This is one large cap which you must have in your portfolio. And like I said, 10% move from here will mean that the Nifty has to move up. And that is now the case that the large caps are actually going to lead the market. So I think Reliance will be one of the leaders rather than a laggard. And that is what is going to set the ball in motion. Numbers were fairly better than what the street was making, and it takes a couple of days to justify. But I think that definitely this will be one large cap which most would want to chase, particularly on the foreign investor side.
Right, Sanjeev, great to have you on the show. We'll let you go on that note, and we hear you're coming soon to Mumbai, so see you in the studios then. Let's move on and let's talk about some of the other stocks which are going to be in focus. And remember, L&T is due to declare its numbers. Chakri, just wanted to understand how much of the manufacturing theme is already in the price, led of course by heavyweights like L&T, or do you think this is a long haul story and there's still money to be made?
This is a long haul story, and clearly valuations are still pretty much in their favor. In this coming quarter, I think we expect to see some kind of a margin improvement. The revenue growth story, the order book is pretty much very much intact. There might be some slowdown as far as some individual segments are concerned, but not overly concerned. And if an economy has to grow, and clearly infrastructure is the key for it. So therefore, I think manufacturing is clearly a story which is pretty much intact.
Right. In fact, since we're talking about L&T, it's due to report its numbers. Let me take it across to Lisa and find out what the 18-hour poll is penciling in.
Well, L&T is expected to report good set of numbers. Revenue is expected to grow 20% on year-on-year basis. Even EBITDA is supposed to be seen good growth of around 10% on year-on-year basis. However, margin is expected to see some slight bit of pressure, and that is because of more orders coming in from the low margin orders, as well as normalization of margins in the defense as well as the hydrocarbon segment. So that was on the parameters revenue EBITDA. But moving on onto the order inflow is expected to see a growth of around 30% on year-on-year basis. And the factors to keep a watch on would be the ordering momentum, especially from the Middle East region, the competition intensity, how will it impact the margin, the progress on the divestment for the non-core business, that is Hyderabad Metro as well as Nabha Power, as well as the management commentary on the new business segments, that is solar hydrogen. Well, last time the management had given a guidance of revenue growth in the range of 12 to 15% and order inflow growth of around 10 to 12%, while the core margin is expected to be at around 9%. So we have to see whether the guidance remains intact from the management commentary. So that's largely what's being picturized around L&T earnings, which is expected to report tomorrow.
Naresh, the move in Reliance yesterday on a scale of 1 to 10, what are the chances based on yesterday's price action that Reliance has woken out of its slumber?
So last 2 days, 2 days of consecutive move. Now the only confirmation needed is once we start crossing recent swing highs. So if we go to the month of October, the top is closer to 2367. September end also we made a top around 2370. So if that can be crossed, then we could call it is out of the slumber. So as of now, would face a lot of resistance around 2370. So if we cross that in say less than a week, maybe then that would be a confirmation as a trend change, and then we open up upsides to 2500, 2550 also.
Rudramurthy, what is your sense on Reliance?
I agree with Nuresh. In fact, last 2 days of bounce, whatever we have seen, it has just come back to now its 20-day moving average, which is close to around 2,311 to be very precise. So for me, the move today today or in another week's time should cross that hurdle, which is at around 2,365, 2,370 zone. So if I have Reliance and if I'm a short-term trader, I will definitely look at booking profits on rise to those level and let it cross decisively 2370 to be very precise, and a close above 2370 confirms to me that yes, there can be a trend reversal.
The one stock to look out for today is going to be Spandana SPTI. That's going to be reacting to its numbers. The PAT has come in at 116 crore rupees versus 50 crore rupees on a year-on-year basis. So we're almost talking about a 2x jump here. Just want to highlight what the takeaways have been in terms of their earnings and what actually led to this kind of robust quarter. The incremental growth driven by new customer acquisition. The borrower base has now grown about almost 24% on a year-on-year basis and 12% on a sequential basis. The PAT jump that you saw of about almost 2x, that's been aided by robust core NII growth. There's been very strong AUM growth as well and higher DA income as well. The asset quality too has actually seen an improvement. So the company has really delivered on all grounds really. Surprisingly, the credit cost also spiked significantly to 90 crore rupees versus 30 crore rupees on a sequential basis, of which 60 crores is towards impairment, which pertains to one of the pre-April 2021 book and SR as well. So yes, we've seen very, very strong performance coming in. In fact, you know, the con call takeaways as well are very, very smart and strong. They're saying that they are expecting a disbursement of about 3,000 to 3,500 crore rupees in the third as well as the fourth quarter. They're going to end the year with a 12,000 crore rupee of AUM, which means that the guidance remains unchanged and they're looking to deliver on that, and they've already started work on their Vision 2028 plan, and they're going to share this plan by FY24 end. So yeah, Spandana SPTI has been one very, very strong set of numbers, and we may see a sharp reaction on the stock as well. Chakri, I don't know if you've taken a look at the numbers from Spandana.
Spandana is a company which we don't really invest that much. But, you know, one of the things that has been impacting the sector is the segment to which they lent, and that has always had a fair share of problems in terms of recoveries. And I think that is, outside of that, the valuations are clearly on the company side, given what it's gone through. But outside of that, we don't really cover the stock really in depth.
Right. Yesterday, it spiked up about 3.25%. 9:10 is where that stock shut shop for the day. And maybe you could see some follow through coming in. Naresh, I doubt even you track this one, but if you do you sense further follow through?
So technically, yes, Spandana SPTI as well as the whole sector, if you look at it, all the similar names like a Satin Credit Care has broken out. Spandana SPTI only has the risk of selling in coming from one of the promoters or ex-promoters rather. So out here, the stock has broken out say a high of almost 2021, which is where it paused around 850. Then a recovery in June 21 also, it had stopped at 850. 3-4 months back also it had stopped at 850. So clear range breakout done. Pre-COVID, the stock used to be 1100, 1200. So slowly and steadily, this could go towards the 1100 mark going forward.
What also has done, where are some of the railway stocks? Hello, let's look at them. You've got RVNL. I'm just even forgetting the names because we were discussing them so often that Now they're just at the back of your mind. RVNL, let's look at IRCTC, Rail Vikas Nigam. I mean, this is down 7% in last 1 month. IRCTC down 2% in last 1 month. Railway stocks have reversed, but have they reversed permanently? Chakri, railway stocks have reversed, but have they reversed permanently?
Look at companies like Tatago Wagons or Jupiter. These companies are benefiting, one, from the Indian Railways itself going through a major rehaul, and second, from the metro, and three, in terms of the ancillary that they are getting into the whole value chain. And four is the export model, which was never there for these companies earlier years, and that has clearly now become very real. So if you add up all these various revenue components, which provided with a very strong order book, and in this case, usually in most of these cases, it's the government or government-related entities which are ordering. So the revenue is pretty much secure. The payments are pretty secure. And if you take a company like Tatagar Wagon, for instance, it's trading at about 25 times. Now, for between 20 to 25 times, depending upon how the revenue is recognized, is not expensive given its growth trajectory.
Okay, fair enough. Meantime, wanted to also get in a take from you, Chakri, as to what the outlook is when it comes to individual new age tech stocks, given the fact that we have seen a turnaround in a lot of them when it comes to the financials. Some of them have even recovered from the earlier lows. That's the 1 year chart of a Zomato, for instance. Do you believe that the valuations that they command are still, sky high?
Because the valuations of not just the new age fintech, but also the financials themselves are not very high. If you look at banking, has actually kind of underperformed, right from the frontline names to the second tier names have actually underperformed over the last several months, not just in the last few weeks. And against this backdrop, so therefore I would rather stick with the frontline financials and NBFCs rather than getting into some of these fintech names.
Okay, some more stocks which are worth revisiting really from a technical standpoint. JP Associates 15% higher, Vodafone Idea 7% higher, NBCC 6% higher. Last week we were debating and deliberating that midcap stocks are getting smoked. And 2 days of stability and the rank mid-cap stocks which are patronized by retail traders and HNI traders, they've come back. All I'm saying, Nuresh, is if you do a mood check, the mood check is telling you that, look, the small cap mandi has come and gone.
So if we look at the small cap index itself, it is back above the swing lows. So the recovery has been sharp. It did not correct much below the swing lows. It did not go and test the 200-day moving average. So selective moves are continuing on the small caps. And when we look at these names, what is happening is, say, most of the companies which went through a terrible cycle have gone delisted over the last few years. The ones which have survived actually can surprise on the way up. We've seen Suzlon go up from single digit all the way to 30 levels. Now, if you look at Jaiprakash Associates, the stock went all the way almost, say in 2020, the stock was 1 rupee. And from those levels, it has come back to 15. It was at 15 back in 2021 as well. So technically, the volumes are very high. So if we were to remove the name out of the stock chart would look interesting. It's just that we have a bias given the history of the stock wherein it has fallen 95 to 99%. So if one has a risk appetite, one could actually go long on some of these names as a basket. If you look at Vodafone Idea, also similar structure. Supposed to be a high beta name, but the stock did not break the swing lows of the last 2 months in the current correction. In the last 2 months, the stock has gone to 10.5 and recovered back closer to 12 odd levels. So 12 and a half is actually a resistance for the last 2 months. If it crosses that, it would be a breakout. So one can just not dismiss these names as indications of froth. It's just that they've gone 95, 99%. The survivors could actually surprise. One can avoid it if one is not comfortable, but I would not make a bet on the markets looking at these names. And overall, the conclusion is very clear. The small caps and the mid caps could only get selective. We may not see a sharper correction as of now.
It's 9 a.m. Let's check in on the pre-open rates this morning. And for now, it's a pretty heady start for the Nifty. We've scaled up on the pre-open tick, that is, to about 19,650. And for the Sensex as well, it's a sizable uptick that you're seeing. But do remember, we had the US markets wrap up comfortably in the green. Asia didn't quite follow suit. Let's find out those mid-cap stock ideas as well from our chartists. Rudra, your top trade?
See, for me, Ujjivan looks a good buy after this correction what happened last week. So for me, Ujjivan is a buy at current market price, and on the chart 495 is a very, very strong support. So at current levels, being very closer to those support zones of around 495, 500, I will buy Ujjivan looking at initial targets of 570 with a strict stop loss of 495 on a closing basis.
Right, and find out what Naresh has on his radar. To you, Naresh?
So NBFC space looks interesting. We have Saturn Credit Care over the last two sessions. Post numbers also, the stock has seen a decent recovery. Good volumes out here. Getting close to that previous swing high of around 250.55. The stock is much lower than where it was, say, back in 2018-19. So could be a turnaround case for the stock on the long term. Short-term target price of 270, stop loss at 230.
Let's get a move on then and find out some of the other top stories that we're tracking. As you have Israel intensifying its ground and aerial offensive against Hamas in Gaza, there is also a growing global outcry demanding a humanitarian pause to allow aid in the region. However, the Israel Prime Minister has ruled out a ceasefire with Hamas, even as the death toll has now crossed over 8,000, with women and children forming the major share of these casualties. Meantime, the nation celebrates Unity Day to commemorate the birth anniversary of Sardar Vallabhbhai Patel. The Prime Minister will be flagging off a Steam Heritage Special train in Surat as a tribute to the Iron Man of India. And a curfew has been imposed in Maharashtra's Bid after the agitation for the Maratha reservation only intensified in the area. Protesters have targeted houses and offices of several legislatures in Bid and Chhatrapati Sambhajinagar districts. Meanwhile, the Chief Minister Eknath Shinde has announced interim steps for reservation and issued appeals for peace. And now for some news in the world of sports. Inter Miami CF star Lionel Messi has won the Ballon d'Or for the eighth time, fending off competition from Manchester City striker Erling Haaland after leading Argentina to the World Cup last year. He becomes the first MLS-based player to claim that coveted title. Meantime, Afghanistan outshined Sri Lanka in the ICC Men's World Cup, defeating former champions by 7 wickets to keep their semi-final dreams alive. With 6 points, Afghanistan now stand at the 5th position in the World Cup tally, above teams like Pakistan, Sri Lanka and even England.
All right, क्या खबर है? For that, let's go to Sharad.
Well, yes, in focus, we are having Mahindra Lifespace developers, and the buzz is that there might be a delay in the launch of two of its projects in the current fiscal year. Now, importantly, this also includes Santa Cruz redevelopment project, which might have a spillover going into the next year. Now, the company initially had started and actually targeted 9 new launches of the projects in the current fiscal year, and currently they have been successful when it comes to 3 of these projects. Now, the gross development value of these projects, they range between 2,500 to 3,500 crore rupees as per broking reports. And if you look at the stock itself, there was a correction by almost 15% from the recent high levels, but going ahead, the management expects there might be an increase of 5 times in its pre-sales numbers over the next 5 years in the residential segment. Also importantly, the channel checks also suggest that there might be some early launches also of a couple of other related real estate projects as well. And if you look at the Bloomberg consensus of 8 analysts, the 12-month target price stands at roughly 603 rupees per share, indicating a roughly 21% return potential going ahead.
All right, let's get closing comments from Chakri. Chakri, so if you have to, let's say, identify one stock which could be the Diwali pick, which one would that be and why?
Yeah, I would still go with REC Limited because it finances both infrastructure as well as financing projects. It trades well under book value, trades at about 0.7 times. I think it still has a very long growth trajectory for the next secular and also on a medium-term basis.
All right, Chakri, thanks so much for taking time out and joining in. Well, as we highlighted, auto stocks are certainly going to be in the spotlight today, and they're also on the editor's radar on the back of the festivity. How has the month of October panned out? What is the outlook going forward? Let's hear our Nikunj's take.
It's a tricky month to call. I'll tell you why. Because you had, in the month of October, you had first Shraddh and you had Navratri. So first you got 15 days of lull and then 15 days of festivity. So it would be a tricky month to call. Now, tricky month to call, but in terms of a trend, it will be an indicator of which way the Diwali would move. So from a market standpoint, what are markets watching out for? Look, tractors, we pretty much know the trend. CV, we pretty much know the trend. That 15 to 18% jump is here to stay. Passenger vehicle is the tricky one to call because that's where I think the shift in SUV is very strong. But Maruti has also been, indicating that they've had a record Dussehra and, are we in for a surprise there? But the one which markets would really be watching out for in terms of an understanding, if you frankly ask me, would be two-wheelers, and especially for entry level. Is the Indian rural customer or customer back? Because this is a typical time when new bikes are being sold, new bikes are being, exchanged. There's a strong replacement cycle which always happens in the two-wheeler market in and around Diwali and Dussehra. Because if the entry-level two-wheeler bike does not make a comeback now, then you can kiss goodbye to the recovery for next 6 months. Yeah. Because it is like now, see, if you want to buy, you would say, okay, Diwali hai, Dussehra, let me buy a bike. And that's typically how the pattern moves. Yeah. So if you don't get a recovery there, so I think that in a sense will have an impact on at least the stock price of Hero MotoCorp and the stock price of Bajaj Auto in the near term.
All right, that's the take on auto sales. But what are the index calls this morning? Let's find out what our chartists are betting on and what their advice is, rather. It's a no trade, and that seems to be the consensus from Naresh as well as CA Rudra. You've got Kush, who believes that it's a hold recommendation on the Nifty index this morning. Let's find out about the Nifty Bank Index. No trade is what majority of our chartists are advising, with a hold call from Kush Bora.
Okay. Naresh, one stock which in a sense was the casualty yesterday was Mahindra Finance. It's a stock which has given a lot of false starts. Big days on the upside, big days on the downside. Heck of a volatile stock.
So the stock had a very strong run from Feb of 2022. The stock used to be 140, went up to 340 odd levels. And now we are on the other side. Again, we go back to the same prices where it used to get stuck. So somehow 200, 220 has been a magnet for the stock. Somehow it keeps coming back to those levels. Even in from the bottom, multiple times 220 was a problem. So 220 is the support area where I would expect a lot of support. So if it comes to 220, 225, it actually is a zone where one can expect a bounce back from. And the stock has been in a downtrend ever since it topped out at 340. It was making lower tops and lower bottoms, whereas the rest of the sectors are doing well. So if you have a L&T Finance holding hitting 52-week highs, you have Saturn, Spandana. So clearly the underperformance was there for quite some time. So as of now, 220, 25 is a price point where I would be watching out for a bounce back trade.
That's Spandana SPTI holding up smartly in trade, and a bit of a bounce also actually on M&M Finance at the pre-open rates at least. Let's see what DLF is up to. Their collections have managed to surge a good 88% on a year-on-year basis and 50% sequentially. So that stock is well holding higher by 7/10. There's Marico too, positive commentary after getting beaten down thanks to the slump in the rural demand. This stock has finally made a comeback. They've upgraded their margin guidance as well. That's Marico in trade for you, but no. The stock still is a little muted in trade. Good operational performance, higher other income, which has led to a beat in the PAT for TVS Motors. Let's revisit that stock. And then Spandana SPTI, which we just highlighted as well. CG Consumer, I want to look out for what that stock is doing, considering the Butterfly Gandhimati merger has been off, considering shareholders of Butterfly were the ones which were against that. So CG Consumer, that's down about almost 0.5% as we speak. That's the stock in focus for you. Lots of other names which should be reacting to their numbers, and let's just address the disappointing ones firstly, because there is word on UPL that the management is saying that the Q3 numbers or the Q3 quarterly performance is going to be monitorable because of El Nino impact, and that they may actually look to reduce capex. That stock lower by about 0.6. Although yesterday after the numbers, it did see a bit of a spike up. Sterling Tools, DCM Shriram, all disappointing set of numbers. Colgate, they've got an income tax liability notice for about 170 odd crore rupees from the IT department. Specialty restaurants, these numbers are important. The EBITDA is actually lower by a good 23%, and the margins as well have seen a squeeze. They've come in at 16% versus a comparable of 22 in the same quarter last year. That stock too lower by about 1% as we speak. Gokuldas Exports, that's also been a bit of a disappointing quarter. SRF, let's see what that stock is up to, because much as the downside, on the upside, SRF is expecting a single-digit growth in the specialty chemical segment in FY24. That stock starts off flat. At least that's what the pre-open rates seem to be indicating. And Blue Star also has come out with its numbers, and a decent set actually. Revenue uptick of 20%, EBITDA has risen 43%. Blue Star is gapping up 6% in trade right now in the pre-open rates. And then Rainbow Children's Hospital as well, wherein the margins have come in stable at 35% year on year. That stock though is lower by about 1.5% as we speak right now. But Naresh, just to revisit the two big performers from yesterday, both Reliance and HDFC Bank, and what do you see on the charts today for them?
So Reliance could make a comeback towards that 2350, 2370 mark. Only need to look at whether it can cross 2370. If it sustains about 2370, that could be a shift in stance for the stock and a reversal in place. HDFC Bank similarly has a much difficult resistance around 1540, 1550. For the day, could make a dash towards 1520 levels where it should find some resistance. But overall, either of these names actually has to turn around for the Nifty to really make a comeback. So 1540, 1550, 2370, these are the two price points I would be watching out for in both the names.
Minute 40 to go. We are in for a solid recovery. I mean, from where we were, let's say, after that big sell-off on Monday and Wednesday versus where we are right now, I think it's a remarkable recovery. You've gone past key levels which are important in terms of the comeback for the small cap index. The breadth is looking much better than what it has looked. The small cap index is actually up 5% from the Thursday's low. So the selling happened on Monday, Wednesday, Thursday afternoon, and from the Thursday's low, you're up 5%. Nifty midcap is up 3%. Add all these factors up and you are looking at a sizable kind of a comeback, which I think is evident. It's not a bad market, frankly. I mean, it's a market where you can endlessly argue about valuations, Fed, where things are moving in terms of the trajectory for the interest rates, inflation, but the macros are not really having a large impact. If at all, the FI positioning, I think, is still very bearish. The retail positioning, which was long and hard, that got cleaned out in 2 or 3 days. And no stocks are in the FNO band. That just tells you that the commitment levels this way, that way, at least on the retail side, it's just not very large. I think it's very, very evident in terms of how things are stacked up now. So 84 points, the Nifty premium has come down to. Bank Nifty is now at a 260 point premium. which frankly is not very dire, so to speak. 23 seconds. I'll let the screen do all the talking. You got L&T today. That's a big number. Market would be reacting to DLF numbers which came. Marico has actually compounded, upgraded the guidance. Blue Star has reported an expansion. So it's not a bad mix of numbers what we are working with. First rates any seconds now will just start kicking in. Vodafone Idea 50% this year. Who would have thought that would happen? Okay, I can see the screen is moving. The first rates are coming up on your screen. It's a lot of green on the screen. Nifty, Bank Nifty, mid and the small cap indices. All of them are off to a great start. You got Inox Wind, where I think there is a block deal there. You can see it on the screen. 30 million shares, 31 million shares, 5% lower. Then I'm going to pick up the real absolute gainers, real absolute volume movers here. Vodafone Idea, Yes Bank, J Prakash Ventures, they all are off to a great start. Then you got Petronet, LNG and Reliance Power, they are also off to a decent start. Let me now mark the stocks in terms of volume. Like I said, a block deal, I think the sizable block deal I can see on Inox when we'll flash it for you. HDFC Bank, decent start. Reliance, holding on for the second day on the trot now. And Maruti post numbers surely has got re-rated in terms of positioning and in terms of appetite.
Yeah, absolutely. By the way, there's a CLSA note also in Petronet LNG, wherein they're maintaining a buy, target price of 270, earnings beat, but large petchem projects are seeing a derating worry. Management has suggested that part of this project may be a tolling style model, plus it exuded confidence from very high IRRs. Petronet LNG is really all over the place this morning. We'll give it a few minutes to actually digest and stabilize. In the meantime, lots of other stocks which are going to be in focus this morning. Let's check in on what Spandana SPTI is up to. Excellent set of numbers. PAT coming in at 116 crore rupees versus the comparable of 50. So you've seen a 2x jump on a year-on-year basis. That stock holding up 1% as we speak right now. DLF2, the collections have surged a good 88% year-on-year and 50% sequentially for a stock which has already seen so much of a gain in a very, very buoyant sector. That is also holding up 1.5% as we speak right now. Marico, positive commentary from the management, upgraded the margin guidance as well. So let's check in on what that stock is up to, 0.5% higher there. And then, of course, there's TVS Motors as well. A couple of brokerages as well have come out with their notes, upgrading their price targets in TVS, good operational performance, higher other income, which is leading to a PAT beat for TVS, marginally higher for TVS right now. What's CG Consumer up to? Considering that merger with Butterfly Gandhimati seems to be off the cards for now. Let's see what that stock is up to, 0.5% lower as we speak right now in trade. And then, of course, let's check in on the big movers from yesterday. BPCL, ONGC, Reliance. It was really all about oil and gas, and of course HDFC Bank as well contributing, moved up about almost 1%. Today too, you're seeing minute bit of those gains actually continue. Nothing meaningful though. And yes, that's sizable, almost 10% equity which has changed hands in Inox Wind. That's quite interesting there. But for the index, it's a very quiet start, but no complaints here, considering from those Thursday's lows, we've made a meaningful almost 2% recovery coming in. Naresh, what are the first trades you're punching in? Anything interesting?
So continue to like ONGC, the stock is very close to a new 52-week high. So looking to add more above 192 levels.
All right. If we have Rudra with us, Rudra, let's get in your first trade as well as what you make of the market open this morning.
See, for me, we are opening right at the resistance zones in Nifty. Let it cross that 19,250 to 300 on a closing basis. In fact, all the long positions what I have taken last week, I will look at booking profits now. And for me, stock specific Adani Port is a strong one. One can look at buying Adani Port, looking at targets of 810 on Adani Port.
Okay, a buy on Adani Port.